Hello and welcome to today's video. It's Sunday, the 24th day of March 2013, as we head into the final week for the month. And it's been an extremely volatile month as far as percentage movements are concerned. Platinum is even for the month, copper's down a bit, palladium's got okay gains, and silver and gold is barely higher. So let's take a look at this now on the monthly term time frame. Starting off with a little bit of a trend line. This is a trend line on the log scale chart that connects the 2009-2010 rally. Obviously, the break of the trend occurred in here, and it's done a whole bunch of nothing since then. You can even make a case for a descending triangle. It's broken this one to the upside, but since it broke it, it's obviously been in yet another downtrend. So you can again draw a trend line, something in the nature of this here, whatever. As far as the volatility is concerned, which is taking the highest level for the period, subtracting it from the lowest to get the difference, and then again dividing that number by the lowest level, it's 5.09% this month. The average month over the last 100 times or 100 months is 17.5%, and the lowest, this would be the lowest level going back to 2003, month ending June of that time frame, and that's of course when the everything really started to get going. Okay, let's take a look at this now on a shorter term time frame. Let's go next to the 5-hour chart and then switch it up to the daily time frame. And this is nothing more than a major mess. So the month started here, and it's just nonsense to say the least. Now, if you're watching Ira Epstein's video, or if you're looking at other sites, then you would notice on the March 20th low that you might see a level at 2840. And I don't know how they're getting a level that is so far off, actually. I'm using NetData's site for the data, and that's a free site. It's got the volume on it as well, which has been showing that the volume has been extremely massive over the last couple plus weeks. And it usually occurs in the morning session, U.S. time frame, starting usually around 8 to like noon. And it's on up days. In fact, if you look at the last couple weeks, on days where we've had 20, 30-cent gains, they have come on extremely high volume within the site. And on days where they go down that, it's happening on extreme light volume. So I find that interesting, to say the least. Now, I've done Google searches for high silver volume, and I'm getting nothing except for the video I did when the volume was just really getting ferocious to start off. So I look at that, and I do see this thing breaking out relatively soon, but right now it's been in this nonsense mess. Now, as far as this month is concerned, the areas in which it's been trading for the majority of its range, I would have to say it's somewhere around here. So it's pretty much in a 25-cent range since the month, since the 5th of March or so. And that's been around from 28.75 to 29 spot. That is extremely tight, to say the least. Now, I can also come out and say, okay, now we got this high that matches this one, and we got this low that matches this one in here, and you did it relatively quick, making a higher high from here and a lower low from here. Again, there's another site that says 2840. I wouldn't lead too much into that when you got a choppy mess, sort of like what we are seeing in here. Now, as far as some key levels, I think the more important short-term support level would be in or around the barely below 28. And then you got this significant resistance at about 29.36. Let's move on now to the daily chart. And again, we're seeing this band just going sideways. I'm just now going to count the candles in here. 13, 14 days, so about 3 weeks of going sideways. Again, you can see that the The 18 average of lows is in at 28.63, and for the most part, again, like I'm saying, 75 cents has been key support. And the 18 average of highs is 29.13, but it's not been over 29 that much in the last couple of weeks. The next key levels, as you can see in here, would be 29.54, followed by 30.5, also long-term 30 is as well psychological and a key number as well. Now, as far as an indicator that I've made, ignore the date. This is a typo. It's actually closing level for 2013, kind of obvious. And this really could indicate whether markets are overbought, oversold, and if it's below the zero line or a negative points, which it is, then it's considered to be oversold. And if you're looking to buy low, sell high, then generally you want to buy when this thing is really low, and you want to sell when this thing is really high. Okay, let's move this now on to the gold charts. We'll look at the exact same time frames that we did with silver. We could start with a uptrend line again. There's a lot of these uptrend lines here, of course, that was taken out, and you could make an uptrend line maybe starting here. That's pretty much been in play, but overall, it's an easy story. You got sideways in here, then you have a nice uptrend. You go sideways, uptrend, down move, long uptrend, and now it's been going sideways. So when the sideways movement comes to a completion, what is the most likely scenarios on both cases? Obviously, if it stays within a range, it's going to do that. But when it breaks out of the range, it's either going to break to the upside or downside. So what would be the case for both? Obviously, if it breaks to the downside, I'm looking for key support at the next level at 1425, 1400 area. At this key resistance, I'm also expecting something like this, where if it does make that move, you would probably get some sort of washout bottom, and then later on test this range. And when you break it above this mark, then you'd be back into a bull market. So you'd make a nice green candle, go up in here, maybe go sideways for a bit, and then continue an uptrend. Let's take a look at this now on the shorter term time frame. 5-hour chart's a little choppy, but not as much, because it's obviously been outperforming silver for the month of March, but a lot of choppy retracements along the way as well. You can make a case at least that you got an uptrend, but again, it's just one of those messy uptrends to say the least. And now up in for a challenge of the late February highs of 1620 right now. Looking at this on the daily chart now, and within this, it's almost like a little double bottom in here. A double bottom is where you go down to a period, like it doesn't matter where you go down to, and then you rally, doesn't matter where you rally to. And then you sell off near or close to the last bottom, and that's close. And then you make it back to the previous resistance point, which, of course, that level I was just talking about. And if we take a look at the length of the pattern, just a quick general idea for the different targets. So we got one, of course, at 1640, but then again at about 1675. Okay, so that's the gold charts for today. Let's now move this on to the gold to silver ratio. We're going to start off with a 120-hour time frame. Show what's been going on since the sell-off occurred in silver in the month of April 2011, May, of course, more likely. And the gold to silver ratio went from about 31 up to about 60, really decently fast. But since then, it's been just doing a bunch of sideways nonsense, to say the least. If you look at the 18 average band, you're above it, you're below it, you're above it, you're below it, and then you resisted it, and then you went below it, but unable to break support, and then you went above it, supported it, and you have yet to break resistance. So choppy, to say the least. Not much is going to happen until it either has a clear breakout above 60 or a clear breakdown below 48. So any range between 48 to 60 just keeps it in the sideways consolidation. Okay, so now let's shorten out this chart a little bit. Let's take a look at it now just from this high and this low. And we'll do that by using a 90-hour time frame. And what we're seeing here is the first candle has the massive volatility movements going from 44 to 60 in less than 90 hours. In fact, it was half this time. It was about 40 some odd hours, or a little under 2 days, where this occurred. And of course, since this point, you can see you got this lower high, then you got this higher low from, or higher high from here, but lower from here. You make this low, lower low, and now you made higher lows. So it's just a bunch of sideways nonsense, to say the least. Next up, I want to take a look at it from this high to this particular low. To do that, let's take a look at this on the 17-hour time frame. And again, if you've been watching the Ira Epstein's video, they've been showing a pattern where it's a little wedge formation. You have this support level in here, and then a resistance level. But their resistance mark is somewhere like in here. See, what they do is they're showing a line chart with 1 tick per day. I think they take their closing levels or the 1:30 p.m. New York time levels and divide gold by silver. What I do, on the top of every hour, I take the price of gold and divide it by silver, and this gives me about 23, 24 different ticks per day. So what we've seen now is that this level of previous resistance is now in the area of being tested. Okay, so what we're going to do now is we're going to take a look at some older charts of the gold to silver ratio. No need to update them, but just update them of what has happened. So let's first take a look at this on the 316-hour. This is a chart I put up on the 1st of February. And of course, let me just show you the price, which is like 56. Yeah, 55.96. Okay, so again, let's take a look at this here. So we're up to 56. So what does this tell us now? That we're pretty much at the top part of this band. And this is after a situation where you had the sideways movement, and then from this high you went down, and you've retraced 2/3 or 61.8% up to this level in here. Obviously, you'd still be below this declining running average from this high, which is good to indicate when a changeover of trend is coming into play, because I find it very interesting, and it does this not all the time, but often, that you're using, maybe this Fibonacci level of 59 as an area to indicate if it's going to break the trend and show that it's a failed move by holding and staying above this line. And you can also use the running average for the same thing, because it's got to break above and this average, and then have it start to go higher, something like this, and then like that. That's a little bit of a big uptick, but whatever. So that's something you'd be looking for, and not much has been occurring. You're just in this sideways consolidation mess. Final chart, again, same date, and that would be the 114-day time frame going back to 1968. So just basically, at a new period, it's got a green candle back up to this previous high, right where this 18 average of closes happens to be. It ended at this time at 55.77, so it's pretty much there. Also, you got this running average from this low, which is sideways. It's below it, and you had this failed, or at the time, a little bit of a failed move, but it also could be supporting this dead cat bounce, and then any move here would make this average start to go lower. A lot of it is it's really, really choppy right now. On a fundamental level, I am expecting this to go lower, or at least that is how I'm making my wager, in that I am not looking to be buying gold, and I would rather buy silver. I do know that this does go up and down, and I would be expecting, when you break below this 20 level, that it might be a good time to start speculating trading silver for gold. But until then, I'm looking at this as a possible failed breakdown that could go higher, but I also look at this as you broke support, you're now finding resistance within the band, and this as well. And that's an area, of course, where it can start going lower. So that's my opinion. Do what you got to do. And what do you think? Because that's a good question. What do you think? Because if other people are thinking for you, you can be in trouble. It's up to you to think for yourself. Do what you got to do, and then make your own reason for why something's happening or why you want to do something in particular. And that's just a bit of a ramble. But anyway, thank you for tuning in, and have yourself a great day. Bye-bye.